हाय इन्वेस्टर्स, वेलकम टू एसओआईसी। तो आज के पॉडकास्ट में वी आर होस्टिंग मिस्टर सिद्धांत भंडारी विद whom आई वर्क वेरी क्लोजली बिकॉज लास्ट 4 to 5 years से लोगों का काफ़ी बिजनेसेस पे डिस्कशन होता है एंड साथ साथ काफ़ी इंडस्ट्रीज पे एक दूसरे के साथ सीखने को मिलता है। एंड ऑल्सो एक इंटरेस्टिंग थिंग क्या है कि इन सम वेज आई ऑल्सो कंसिडर हिम टू बी माई मेंटर बिकॉज ही ऑल्सो इन्वेस्ट इंटरनेशनली। तो काफ़ी एक डिफरेंट पर्सपेक्टिव मिलता है एंड इसी पर्सपेक्टिव को आपके इधर लाने के लिए टुडे वी आर डूइंग दिस पॉडकास्ट, जिसके अंदर हम मल्टी कंट्री इन्वेस्टिंग की बात करेंगे, इंडिया में डिफरेंट सेक्टर्स की बात करेंगे। देन हम पूरी एक बहुत बड़ी जो आज डिबेट चल रही है स्मॉल कैप वर्सेस मिड कैप वर्सेस लार्ज कैप फंड्स, इनकी हम बात करेंगे। तो ये आज आज के डेट में काफ़ी ज़्यादा बड़ी डिबेट है। एंड इसके साथ साथ हम ये भी एक डिस्कशन करेंगे जो हम जिससे हम ये पॉडकास्ट स्टार्ट करने वाले हैं, कि वॉरेन बफेट की एक इंटरेस्टिंग लर्निंग है जो सारे इन्वेस्टर्स अपनी इन्वेस्टिंग फिलॉसफी में लगा सकते हैं। एज अ रिटेल इन्वेस्टर आप भी लगा सकते हैं, मैं भी लगा सकता हूँ। तो वो भी हम एक फैसिनेटिंग केस स्टडी के साथ स्टार्ट करेंगे।
First of all, thank you for calling me a mentor. Although I think our relationship has been a lot more equal in terms of giving and taking. But thank you for having me. I've learned a lot from SOIC and from the YouTube channel. So I hope I can add some of that value back today. So, hi everyone. My name is Siddhant. Ishmoit and I have known each other since he started SOIC. We have been exchanging ideas now for 4 5 years. Um, for a long time, I think there was this pull from the SOIC community uh, where you should launch a fund. But obviously, Ishmoit's first passion is teaching. And once you launch a fund, there are a lot of restrictions in terms of what you can do, what you cannot do. If you talk about a stock, can you buy it? If you buy a stock, can you talk about it? And so for the longest time, nothing happened. But I think through some of the great work you've done over time, you know, a fan following sort of built, and the clamor to launch a fund kept going up. And since we have been collaborating for 5 years, we have the exact same or similar investing philosophy. He said, "Hey, why don't you run the fund?" And my first reaction was, "That sounds like a great idea, except no one really knows me. So why would anyone invest in a fund that I'm running?" However, if you invest all your money in India and the Indian stock market via the same units as any other AIF investor, then that has some sort of value, that has skin in the game. You're not just philosophically aligned, but sort of your entire net worth, which is mostly in stocks in India, is also on the line. And he agreed. And so about 6 months ago we launched Persistence Capital. Very quickly, my background: I was born and raised in India. I did my undergrad in the US at Stanford. I've been investing in India since 2015 and across the business cycle. So I actually started off in India in venture. So I used to work at Sequoia. Now it's called Peak 15. I moved from venture to private equity. So I worked at Capital Group, which is obviously one of the largest FIIs in the stock market, but not well known to a lot of people. They also have a $3 billion PE fund. They were a early investor in a company which is now listed, Mankind. They are early investors in another pharma company that will list at some point, Intas. So I spent some time getting trained there. We obviously spent a lot of time looking at small mid caps, but we also looked at private equity transactions for companies that would list at some point. Um, I spent some time there, and then I ran the India book for a US based hedge fund for about 5 years. And when I started the hedge fund is when I think SYC roughly started. That's when we got to know each other. And yeah, we launched Persistence, I guess, about 6 months ago,
Right.
7 months ago.
7 months. Yeah.
It's been an eventful 7 months, but we're happy with the way things have shaped up. So yeah, thanks for having me.
Great. So, just before we go into questions and a lot of examples and case studies, just a standard disclaimer: nothing in this podcast will be a buy or sell recommendation. Any case studies that we are taking is purely from the perspective कि हम लोग बिजनेसेस और इंडस्ट्रीज बारे में एक दूसरे के साथ ज़्यादा सीख पाएँ। विद दैट आउट ऑफ द वे, तो हम फर्स्ट केस स्टडी से डिस्कशन स्टार्ट करते हैं, विच इज़ अ वेरी इंटरेस्टिंग वन।
Yeah.
आई थिंक दिस इज टू डू विद परहैप्स द ग्रेटेस्ट इन्वेस्टर इन द वर्ल्ड, दैट इज मिस्टर वॉरेन बफेट।
Yeah.
एंड बिफोर वी वर सब मतलब हमने शूटिंग स्टार्ट करा इसका, तो एक क्वेश्चन जो बार बार आ रहा था कि ही गेव अ वेरी इंटरेस्टिंग केस स्टडी। वॉरेन बफेट एक्चुअली में उनके जो फैक्टर्स या सेक्टर्स हैं, तो अगर किसी ने उनको रेप्लिकेट करा होता, तो आपको काफ़ी एक इंटरेस्टिंग इनसाइट मिलती। तो सिड कैन यू प्लीज़ रिपीट दैट केस स्टडी फॉर द ऑडियंस बिकॉज़ दैट कैन बी वेरी इंसाइटफुल।
Yeah, absolutely. So let's look at the biggest parts of Warren Buffett's portfolio. There's Apple, which has obviously been the biggest winner in the Berkshire Hathaway complex. Um, there is Precision Cast Parts, which is a niche aerospace parts business. There are the banking stocks, which is Bank of America and Wells Fargo. Principally, he owns two banking stocks. He owns a large railway company. It's private. I think it's called Burlington Santa Fe. He owns, obviously, his iconic Geico, which is the auto insurer in the US. And then he also owns Coca Cola. I mean, no discussion is complete without that, right? Coca Cola. So, broadly, if we had to summarize, he owns logistics via railway, he owns banking via the two banks, he owns aerospace, so niche aerospace parts, consumer business, which is Coca Cola, insurance. I mean, there are many insurance companies he owns, but Geico is obviously an iconic example. And then in tech, he owns Apple. Now, part of Warren Buffett's genius, I would say, is finding sort of these businesses that are advantaged in sectors that are advantaged and holding on to them for a long time. So here's a thought experiment. Warren Buffett's investing style, the iconic thing about him is it's the same today as it was 10 years ago. So could you have replicated Warren Buffett's portfolio? We would go so far as to say that not only could you have replicated, you could have actually picked the better company in each sector. So in banking, it's well known that Wells Fargo and Bank of America, they're decent. JP Morgan is the best run bank in the US. If you look at Pepsi, it's outperformed Coke over 1, 3, 5, 10, 20 years. I'm not talking about one beverages, I'm talking about Pepsi in the US. If you look at auto insurers, Geico has been consistently losing share to Progressive in the US. Progressive's listed, been a massive wealth creator. If you look at niche aerospace parts, Precision Cast Parts as an acquisition has not worked out maybe as well as TransDigm would have if you had just bought and held TransDigm. Apple is very hard to compete against, but our submission is more FANG companies like Google, like Facebook, have probably Netflix have delivered similar returns over the last 10 years. So really, with the exception of the trading houses that he bought in Japan 1 or 2 years ago, where he borrowed money in Japanese bonds at 1% and bought dividend yielding stocks at 9%, and those stocks have tripled, therefore basically tripling your money for free. You could have actually replicated Warren Buffett's largest parts of his public equities portfolio by actually buying better run companies. I forgot in railways. In railways, the better run railway is actually listed. I forget the name now. I think it's Canadian National Railway. That's the name, but there's one more. So you could have actually bought the themes that he is most excited about, that he remains convicted on over the long term, the better version of each of those companies in the stock market, and you could have outperformed. Now, this to me is a very empowering fun fact, and I think that's what makes Warren Buffett special, is that with a lot of great investment funds, whether it's Sequoia, I mean, you know what they do. They back legendary founders who are trying to build iconic companies like Nvidia or Airbnb, but they find them at Series A. Can a retail investor realistically replicate that? No. Renaissance, I don't understand what they do. I don't think anyone outside of Renaissance gets it,
Right.
but they make a lot of money. Can anyone replicate that? No. What's amazing about Warren Buffett is that you could have actually replicated what he has done himself, but even better from a peer to peer analysis and then generated similar, if not better returns. So for us, the takeaways are two. I mean, what we like about Warren Buffett is the fact that his teachings are so accessible and his style is accessible. It works as well when you're managing like $1,000. It works as well when you're managing $1 billion. And that's really amazing that the strategy can scale that well, but there is no entry price like there would be in venture capital, like there would be in Renaissance. But the other part, which is interesting, is when you listen to enough fund managers and everyone takes pride in the fact that they buy the market leader in the sector. They want to buy the number one player. And that is and identifying that number one player is a critical part of generating value over the long term. But what's really interesting if you look at Warren Buffett's career is that with the exception of Apple, None of these companies objectively are the number one in their category. But he has been so disciplined about the way he's bought them that he has outperformed. And I guess the biggest lesson for us here is there's no one way to skin the cat. You can buy a better portfolio of companies and outperform the index, as we have just shown with examples across insurance or railways or paints. I forgot to mention paints, but Sherwin-Williams has done better than Benjamin Moore, which is the paints company Warren Buffett owns. But the other insight is, hey, if you pay the right price, even a decently run company in a good sector can be a great investment. You don't have to actually buy the best one. And I guess the most liberating lesson, at least for me, is there's no one right way. You have to find the method that you can stick to,
Right.
because the method that you can stick to and hold through in periods of volatility is probably the one that will help you over the long term.
I think in spite of owning the inferior business,
Yeah.
he's still done extremely well
Yeah. Yeah.
because his entry price and margin of safety पे जो focus था that was of paramount.
Exactly. I mean, just let's look at 8 different examples. So again, just for the audience's benefit, in banking, I'm comparing JP Morgan, which is a better bank, against Wells Fargo and Bank of America. Let's exclude Apple from the analysis. Apple is truly a unique company. So that's its own, that is, and I think that has been his biggest winner. So in fact, when he has combined both his superpowers, that is the biggest winner in his career. Now let's look at the other companies. Precision Castparts, which is niche aerospace. It's not as good as TransDigm. Pepsi, interestingly, much better run than Coca-Cola, has done much better over the long term. Progressive has done much better than Geico, which is the insurance company. The publicly listed railway companies boast superior operating metrics to the one that he has bought. Sherwin-Williams has consistent, which is paints, it's the Asian paints for the US,
Right.
has consistently done better than Benjamin Moore, which is the one he's owned. So we've gone through the big, I forgot to mention, sorry. Visa and MasterCard have done better than Amex over the last 10
Right.
years.
Right.
So it's actually really interesting. Like, he has done so well because of his focus on margin of safety. And the one instance where he got margin of safety with the company right, it has been the biggest winner the world has ever seen, which is Apple.
Right.
So I think there's a liberating lesson there, which is if you follow the strategy, you don't focus as much on valuation, it could work out. But even if you get the company wrong, if your price is right, the space is good, you could still do well over the long term.
Right. But I think the holy grail would be quality plus margin of safety.
Apple.
Yeah, that type of setup.
And that became the holy grail for him.
Right. So this actually was a very insightful learning because काफी लोग margin of safety और valuation पे hindsight पे focus होते हैं जब bear markets आती है.
Correct.
That is where it can be used a lot by all the investors.
Absolutely.
Now coming to the second set of questions is that कि now this was with Mr. Warren Buffett.
Yeah.
अब हम इंडिया में different sectors पे आते
Yeah.
हैं and we'll go towards some of your past case studies.
Yeah. Sure.
पहले तो यार हम एकदम कंज्यूमर सेक्टर से स्टार्ट करते हैं
Yeah.
कि हाउ डू यू थिंक द कंज्यूमर सेक्टर हैज इवॉल्वड इन इंडिया एंड सम ऑफ द केस स्टडीज विच कैन बी वेरी इंसाइटफुल बिकॉज वी हैव सीन ओवर लास्ट 4-5 years देयर हैज बीन अ डिफरेंशिएशन व्हिच हैज हैपेंड इन कंज्यूमर सेक्टर.
Yeah.
एक तो आपके स्टेपल्स हैं
Yeah.
जैसे HUL हो गया, डाबर हो गया, ये सारी कंपनीज होगी और फिर एक कंपनीज है जो प्रीमियमाइजेशन थीम में जा रही हैं
Correct.
जैसे रेडिको खैतान का एग्जाम्पल हो गया
Exactly.
पास्ट में. राइट. अब कितने लोग तो पहले प्लेन में ही नहीं बैठे थे इंडिया में आज से 4-5 साल पहले.
Absolutely.
तो भी हम आज ही डेटा पढ़ रहे थे कि इंडिया में मतलब एविएशन ट्रैफिक है दैट इज बाउंड टू ग्रो एट अ केजर ऑफ 9%,
Yeah.
विच इज ऑल्सो वेरी इंटरेस्टिंग क्योंकि वर्ल्ड में इतनी ग्रोथ नहीं आ रही.
Exactly.
तो हाउ डू यू डिफरेंशिएट बिटवीन द कंज्यूमर सेक्टर इटसेल्फ की मल्टीपल सब सेक्टर्स हैं and what is the mental model that all of us can learn via some of these case studies?
Yeah, absolutely. So look, in consumer, ultimately all these businesses trade in general in India at an elevated earnings multiple. So what's really important is getting the growth right. And if you can get some margin expansion along the way, that's the holy grail. Now, growth can come if you just look very conceptually from top to bottom. First is what is the penetration of the category in the country. So like toothpaste is well penetrated. You can grow. Best case, population growth plus minus is your volume growth.
Mm.
Maybe you'll get some pricing, but that's really what it is. So penetration within the broader population, and that can either come from affordability or it can come from distribution. So if you're a bhujia brand like Bikaner Wala or something in South India or North India and you're expanding to another part of the country. So penetration and the drivers of penetration being affordability or geography is a good place to start. Third one in penetration is affordability, which is I could not afford premium spirits 5 years ago. I can today. Now they've allowed a few more liquor stores in my neighborhood, so I can consume this. So that is sort of one really powerful mental model for us, which is like you ideally want to be in categories which are under penetrated, from a population standpoint, and which can be linked to distribution, which can be linked to affordability. So sometimes, it's toothpaste, it's probably there in most of the country. But if it's a liquor store, the number of liquor licenses in a shop are capped. So over time, if more liquor licenses are given, there is that distribution advantage that you have. And then there is an underlying affordability angle as well, which is I could not afford premium liquor 5 years ago. I can afford today. Now, our view has always been that, look, these are not sectors that are cheap. So you have to have high visibility of near term growth. And that growth, you have higher visibility on volume, ideally within top line. Pricing may or may not come. Margins may or may not come because the gross margins might get hit because of commodity price.
तो यहाँ पे जस्ट सो एक्चुअली सेल्स इज अ फंक्शन ऑफ वॉल्यूम इनटू वैल्यू।
Exactly.
तो यू आर बेसिकली सेइंग कि वो जो वॉल्यूम ग्रोथ है वो आनी चाहिए।
Exactly. Double digit volume growth. Like if you look at most consumer categories in India that have created wealth, it is when they have shown very high single digits volume growth with some realization, like I think Titan has for 10 years in a row, or ideally low teens to mid teens volume growth, which, at one point Nestle had that, but now today it might be Varun Beverages. And now this low to mid teens volume growth comes from where? It comes from distribution, comes from improved affordability, or it could come from completely new category creation. Ideally, you want it to come from all three, because if it comes from all three, then that 14-15% is much more durable and can last for much longer than if that 15% just came from one of those three vectors. You've not invented a new product. It's just that you were present in so many kirana stores this year, and that number will go up over time because that has a shelf life. At the end, you will hit a ceiling at some point. And so, if you look at different consumer stocks, the ones that have shown the best shareholder returns have actually done something unique, which is they have grown volumes in their core categories at a healthy pace, and they've managed to create new categories altogether. So, if you recall from our earlier conversations, let's discuss two stocks, Radico and Varun Beverages. Radico. A lot of people don't know this. Like USL is considered the best run spirits company in India, but and today maybe the narrative has shifted. Today people think Radico is the best run, but actually, if you look pre-COVID in 2019 and you looked at spirits as a category in India, no one spoke beyond USL. The conversation began and ended with USL. So when we were at High West, then we actually did a lot of work on this category, and we learned some things that were interesting. For example, in '99, when Suntory was coming to India, Suntory is a Japanese whiskey brand. They didn't want to buy USL. They wanted to buy Radico because they thought Radico was better run. It's just that Radico is not up for sale, so they tried to buy a minority stake in USL. So even from the 90s, Radico, which was purely a contract manufacturer, launched a brand, and its first brand was a millionaire brand. I forget the name. Is it 8 p.m.?
8 PM ब्लैक
8 p.m. Black. Yeah.
इसकी ऐड भी थी एक पाकिस्तान इंडिया के बॉर्डर पे।
Exactly. I think they did well in that CSD department.
राइट।
And what was unique about Radico compared to other guys is that because they knew that it would be very hard to compete with USL in whiskey, and whiskey was most of the market, they tried to dominate every new type of spirit that was coming around. So, for example, Magic Moments cornered a 50% market share in vodka in India. And they did this at a time when people thought vodka as a category was not real in India. In fact, there's a really interesting anecdote. Among all the hard liquors, vodka is the only one that doesn't smell. So one of their sales pitch in like tier 2 to tier 5 towns was actually you can have it and no one will find out.
राइट।
Now it's unique and it worked and something an MNC is unlikely to copy. So Radico, if you look, has always consistently been at the forefront of category creation. First, they did it with Magic Moments. Then they started this whole movement of super premium whiskeys in India. And not just whiskeys, I think they did brandy also, but like Rampur single malt was
राइट।
one example. They did some Jaisalmer gin, I
राइट।
believe. They did some super premium rum, I forgot, Morpheus or something.
राइट मॉर्फियस।
Morpheus. So they invented three new categories that they then tried to dominate. And what they used to their advantage was the simple fact that, for USL, whiskey is so important, the management doesn't have bandwidth to do anything else. Um, so to us, like in today, Radico trades like whatever, 50, 60, 70 times earnings. In 2019, you were basically buying Radico at 15 times trailing earnings when margins were not full. You looked at the 1, 3, 5-year, 10-year data, the volume growth was spectacular. And what was more impressive was the DNA to create a new consumer brand. I
Right.
mean, it's one thing कि, in USL, the sales pitch was always कि global portfolio है, यहाँ से कुछ ले आएंगे and we will make money. But for Radico, they didn't have that luxury. They actually had to create it. So what did they benefit from? They created new categories. Premium liquor became more affordable as the country premiumized, as people became wealthier. And then distribution advantage is there because you're not USL. Radico is originally from North India. So over time, they added distribution in South India. And distribution in a canteen system is tough. You need to have scale to even do it because your balance sheet has to support the working capital. So it was the holy trifecta of they got distribution, new category creation, and premiumization right. If you look within consumer categories, it's one of the best stocks actually over the last, not as well spoken about because maybe it's a smaller company, but you have made a 4 5x just on the multiple
Right.
and then the earnings growth. And obviously the mix shift from more country made liquor to more premiumization liquor, that has an impact on margins. And then as the company became better, people actually started noticing that Radico's corporate governance was not bad. In fact, it was better than USL. I'll give you a fun example. People generally say MNCs in India have good corporate governance, but here's a counterfactual. Duty free liquor, the largest listed MNC in India for liquor, for spirits, when they sell alcohol in duty free, they don't record that in the listed entity. That's in the unlisted entity.
Right.
But all the surrogate marketing, which is responsible for driving sales, where does that happen? In the listed entity.
Correct.
Does Radico behave that way? No. So to us, it was really interesting that as the business became more discovered, people started picking up on these cues that actually their corporate governance isn't really inferior to what is considered the bellwether of the sector.
Right.
And so they sort of hit that holy trifecta of creating a new category, growing penetration, and also affordability and premiumization. And I mean, we got lucky also, there was margin expansion along the way. But let's take another example, Varun Beverages. Exact same story. If you look in 2017 and you spoke about consumer stocks, no one spoke about Varun Beverages in the same breath as a Nestle. And how did Varun Beverages pull it off? Well, first they consolidated their leadership, right? They started off in North India, they acquired bottlers in South India, distribution. Second, the core category is growing low double digits because of refrigeration, right? Soda has grown low double digits because now villages have electricity. Third, they created a new category, Sting, which is an energy drink. Now, in most parts of the world, especially the US, energy drinks have been phenomenal wealth creators because it's a sticky consumer habit. I think Monster Energy and until recently Celsius had also done quite well in the US. India, may we got both gifts in one stock, which is the same soda company also owned the leading energy drinks company. So that's a new category that they grew in. Now they took distribution to another level, which even Radico could do, but in small amounts, which is Radico was selling premium liquor to Indian diaspora overseas. But Varun Beverages actually built an overseas business by acquiring franchises left, right, and center in parts of the Middle East, parts of Africa, and aggressively gaining market share. And so, if you look among mid large cap consumer stocks, it's been the best one. When you look at it 5, 6 years ago, it was not considered as high quality as your Nestle's, Unilevers of the world. Um, Obviously, because they do bottling, it's more capital inefficient. But hey, I mean, at the end of the day, if you showed low double digit volume growth in your core category, you create a new category and you expand distribution. I mean, it's pretty hard to beat that, even if your business is not 100% ROCE, because ultimately the ROCE is above cost of capital, it's 25%.
Right.
So I just think like if you can find all of this, that's when you've hit sort of the home run within the consumer sector. And like we are desperately looking for the next one, but we want ideally all of the above.
Right.
And it's hard to find all of the above.
I think especially with your first example of Radico, especially it's a media dark industry.
Yeah,
You cannot just go and advertise.
exactly.
So once a brand is created, maybe it is even appreciated more by
Exactly.
targets.
Exactly.
So I think for the audience, the learning could be key. There could be some other alcohol companies or other consumer businesses where the holy trifecta gets
Exactly.
met. Margin expansion होने का possibility है, category creation and double digit volume growth है.
Yeah, yeah, yeah.
Right.
And ideally penetration.
penetration, that's the most
Yeah.
important one.
People keep creating new toothpaste, but now everyone already has a toothpaste. So like at best they'll replace it, right?
तो यहाँ तो टूथपेस्ट में नमक डाल लोगे,
Exactly.
या तो कोल्ड बेस्ड टूथपेस्ट बना
हाँ,
दोगे, या तो उसको टूथपेस्ट को हर्बल कर दोगे।
हाँ.
इससे ज़्यादा क्या कर सकते हो?
Exactly.
टूथपेस्ट तो सबके घर पे ही है।
Exactly.
राइट, राइट।
और फिर इंटरेस्टिंग ये भी है कि उस टाइम एक पुशबैक था दैट रोसी इतना हाई नहीं है इस कंपनीज का बिकॉज ये लोग फैक्ट्री डालते हैं। आई वुड एक्चुअली फ्लिप एंड से दैट infinite ROCE might not necessarily be a good thing
करेक्ट,
because if you have infinite ROCE, high volume growth, then at least for a newcomer in India to come and attack your category, it's easier because they know it doesn't cost you much money. That's why if you see the first moat attack didn't really come for Varun Beverages. It has come now, but it first went towards the HULs of the world. Like people tried to start up retail or like the Asian paints of the world, where people started a paints brand because it was a higher ROCE category. So
राइट।
I think a lot of reason why these stocks were also ignored is because the ROCE is good, just not as good as what you're expecting to see in a consumer business. But that actually worked to their advantage because people ignored the category because of that.
And also, like we've seen with businesses like Page Industries or businesses like your Asian Paints, the example, or even with the likes of HULs of the world,
Yeah,
a lot of D2C startups have come up,
exactly.
right?
I think high ROEs are a target on your back. I mean, it's good to have high ROEs, but then you have to hope that your business can withstand a moat attack. I mean, we can't on one hand say that the country is matured and become competitive, and then say that because I've delivered 10, 50% ROE for 10 years in a row and created a valuable business that now trades at 70 times earnings, no one else is going to come. Why would someone else not try? They know that worst case they lose a small amount of money because the ROE is so high.
Right. No, very interesting point linked to the Varun Beverages केस स्टडी is कि अभी कॉम्पिटिटिव मोट अटैक हुआ,
हाँ,
और उसमें भी एक बड़ी इंटरेस्टिंग केस स्टडी है कि हम लोग बाकी सारी कंपनीज की भी कॉन्फ्रेंस कॉल्स पढ़ रहे थे, तो देखा कि एक्चुअली में वरुण बेवरेजेस का इंडिया वॉल्यूम तो अभी भी 11-12% पे ग्रो करा,
एग्जैक्टली।
एंड बट फिर भी आज वो वैल्यूएशन नहीं है जो आज से 2-3 साल पहले था।
करेक्ट।
बट डाबर और टाटा कंज्यूमर,
हाँ,
जिनके ब्रांड थोड़े बेवरेजेस में वीकर हैं,
हाँ,
उनका वॉल्यूम डीग्रोथ या वॉल्यूम बहुत स्लो ग्रो कर रहा है अब। क्योंकि पीपल जो जूस है, जैसे जूस अगर 80 या 100 रुपए का है, और आपको आपके पास कैंपा का ऑप्शन आ गया तो 10 या 15 रुपए की है,
या,
तो एकदम तरीके से एकदम डाउन ट्रेडिंग होगी।
या।
तो अगेन कंज्यूमर भी बिज़नेस करना उतना आसान नहीं है, क्योंकि सेकंड ऑर्डर और थर्ड ऑर्डर कॉन्सिक्वेंस क्या कंपटीशन का आएगा। अगेन इट इज़ लाइक वेरी इंटरेस्टिंग टू सी इन इन्वेस्टिंग।
करेक्ट एंड जनरली लोग क्या बोलते हैं कंज्यूमर बिजनेसेस स्टेपल्स दे आर डिफेंसिव। अभी हियर आर द नंबर्स लास्ट 5 इयर्स वी हैव सीन कोविड 0% इंटरेस्ट रेट्स 5% इंटरेस्ट रेट्स नेगेटिव ऑयल $100 ऑयल वॉर इन यूक्रेन नाउ ट्रेड वॉर वेरी वॉलेटाइल 5 years. How have these defensive businesses done? We can pull up examples of the businesses that are perceived to be less defensive whom actually have given better shareholder returns. So even consumer, it's not easy. It's very it has that appeal because it's something you can touch and feel and it's tangible, but that doesn't mean it's very easy to run, it's easy to make money.
नाउ कंज्यूमर से कनेक्टेड अब एक इंडिया में अब देखो रोटी कपड़ा मकान तो हो गया, राइट? बिकॉज़ वी आर क्रॉसिंग दैट पर कैपिटा इनकम
Yeah.
थ्रेशोल्ड कि आपके पास क्लोथिंग, शेल्टर एंड फूड है। नाउ कम्स द नेसेसिटीज़ ऑफ लाइफ,
Yeah.
कि जो शायद से यस्टरडे में मतलब बेसिकली यस्टरडे लग्ज़री थी और पर आज शायद से नेसेसिटी हो।
Yeah.
तो थिंग्स लाइक म्यूजिक,
Yeah.
अब हर कोई गाने सुनते हैं,
Yeah.
और थिंग्स लाइक ट्रैवलिंग बाय एयर,
Yeah.
मतलब फॉर एग्जांपल कि हमारे जैसे ऑफिस में कई लोग हैं जो आउटसाइड बेसिकली दिल्ली से काम करते हैं।
Yeah.
अब आई कांट इवन इमेजिन टेलिंग देम कि यार आप ट्रेन लेके आ जाओ,
Yeah. Yeah.
बिकॉज इट विल टेक देम 2-3 डेज टू कम।
Correct.
Whereas those productive hours they can just take the flight in 2 hours, they can come, and वो पूरा एकदम hours बच जाता है उनका productivity के लिए।
Yeah. Yeah.
So how do you think about some of these trends of changing tastes and habit, and how do these end up playing out with consumer businesses?
Yeah, yeah. So like actually great you picked up airline. So we actually invested in Indigo, at High West during COVID, like at the COVID bottom. Today Indigo is considered this high quality company. I can assure you, if you called someone in 2020 and you pitched them Indigo, even if they were your best friend, the phone would have gotten cut on you. And the narrative today is that it's a proxy to India's travel aspirations. The narrative then was It's an airline. Warren Buffett sold his airlines. Don't pitch me an airline during COVID. Don't you know no one's going to travel again?
एंड उनका एक जोक भी था ना कि व्हेनेवर आई फील लाइक एन एरोहॉलिक तो आई विल डायल दिस नंबर कि अगर मैं एविएशन
Exactly.
इन्वेस्ट करने वाला हूँ तो प्लीज स्टॉप मी।
Exactly. So actually, Indigo is a great example in sort of a industry that is not as easy to make money, not as sexy in general, but is capable of generating tremendous shareholder wealth. So what got us interested in Indigo? So this was a crazy stat then. It's a little misleading because it doesn't do full justice to the socio-economic disparity in India, but it's still a jaw-dropping stat. In 2020, more people took the train, or in pre-COVID, more people took the trains every 2 weeks than flew in India every year, every 2 weeks. So you know that there is enough of a penetration story just if you can get the affordability thing to work out, because every 2 weeks there's that much demand. So that's good. That means that people travel enough and there's room to at least grow volumes. Then the second thing is, okay, but maybe there are too many planes and, these planes don't make enough money. And then it got interesting. So we looked at Indigo and the entire fleet size of the Indian sort of all the airline companies put together. Forget US and China. I don't think it's worth comparing to US and China. China because they have high speed rail, and US because it's literally like 30 times richer than India. But we compared the fleet size to Russia, Indonesia, Brazil. India actually had a lower fleet size in aggregate terms. We're like, oh, interesting. Supplies actually seems very rational. And this is before COVID. So the supply fell. So that I thought was an interesting setup, which is okay, your demand in travel is this high. Clearly someone's not traveling from a train because they enjoy sitting in the train for 3 days. It's just affordability, and maybe that will get solved, maybe it won't. But maybe instead of every 2 weeks there are more train passengers than a plane for the whole year, it could be every 4 weeks or 5 weeks, and that is tremendous volume growth. And that's still a huge disparity at the end. So there, the exit pay, there's growth. And then that the fleet size is rational. So okay, that is a favorable demand construct. If we believe people fly, this is a sector that could work in theory. But what's important is now let's assess the supply side. Supply side is where it got even more interesting. The net cash balance that Indigo had in the COVID bottom was more than the net worth of its entire competitor base put together. So basically, if Indigo had, let's say, 7 or 8,000 crores of net cash, if you added up the net worth of Jet, SpiceJet, GoAir, and whatever the airlines were functioning then or are still functioning now, Indigo's net cash was more than everyone's net worth put together. So you knew that for the industry, for people in India to be able to fly, Indigo has to survive. If it does not survive, no one else can even think of survival.
Right.
But obviously, that's a theoretical construct. Maybe the pandemic rages on for 3 years. So then we checked, okay, let's assume there's zero revenue the next 2 years. And I know that my friends don't want to talk to me if I pitch Indigo. So maybe it's hard. My friends like talking to me. Maybe it's hard for Indigo to raise money in the stock. So if they don't get any revenue, how long can they survive? And just based on the unrestricted cash they had, they could meet their expenses, I think, for 18 months with zero, literally zero revenue. We knew that that's how good their supply side positioning was. And so we're like, okay, we like the demand, we like the supply. There's been a massive dislocation. But I mean, it is still the airline business. Like, what is why should Indigo be so special? Why should they survive? What have they done right historically? We need to understand that. And so we went and studied the founder's background. Rahul Bhatia actually is a software entrepreneur. That's how he funded Indigo. He started a travel content distribution business called ITQ, which actually, when I was at Capital Group, we invested in. Rakesh Gangwal was the CEO of a US based airlines. Rakesh Gangwal could get the supply together, and he had this unique insight that the way low cost carriers worked in the US and the way they won against high cost carriers is that they standardized the fleet. One fleet, one offering. If you have one fleet, maintenance downtime costs are controlled, turnaround time is faster, and obviously you get a better price because you're buying only one jet. The second insight that he brought to India was this concept of sale and lease back. I buy a plane, I buy planes in bulk, 300 planes from Airbus or whatever. I sell them immediately and I lease them back.
Right.
And I buy planes obviously at a discount because I'm buying 300. I don't sell 300 back. I'll sell 30 or 30 or 30 or 30 or. I make money on each transaction. I don't dividend out that cash. I leave the cash on the balance sheet. Because I've left the cash on the balance sheet, what happens to my counterparty risk? It falls. It falls with the lessors, the people who are lending the plane to me. So I pay lower interest. My maintenance rates are lower because I have the best balance sheet in the industry and I'm buying 300 planes at once.
Right.
And so my two biggest costs that you can control, outside of payroll, I've actually minimized. So they did that. They started with one plane and in a disciplined fashion by doing sale leaseback, they built up a large fleet. But then they went one step beyond. And this is what really blew our mind. Like the level of customization they did. They custom made seats for their planes. Their seats are legendary in how thin they are. I hope you don't have to sit on a flight that's turbulent, but they're really light. And they're really light. And there were stipulations on, hot food, what type of food you can serve. There were restrictions. So they really fought for every gram in that plane. They brought the fuel costs down and they ensured that this is the lowest cost offering that the country's seen. But importantly, unlike peers in the West, they actually have two advantages which I think is underappreciated. So if you look in the US, actually full service carriers won in the end. Why? Because they tried to match them on cost structure, but they had access to the best airports. Like low cost carriers like Southwest would not go to JFK in New York. It will go to some Newark airport or something else. And that's not ultimately where the business travelers want to fly. Indigo took that, but also made sure they didn't have that. They took the playbook of low costs, but they got the best routes. They got the best slots. So they even the business traveler wants to fly Indigo because at some point the seat is uncomfortable, but I have to come to the business meeting on time.
Right.
I can't say I'm not there because it's Indigo. So they got the best seats and balance sheet. If you look at the US planes, what do they do? When times were good, they levered up and they paid out a lot of money as dividends. What did Indigo do when times were good? Nothing. It let the cash sit on the books. They only did a massive dividend before the IPO so the promoters could take some money off the table. And so when they entered COVID, they are the only ones that the counterparties were interested in serving. So as India's income grew, supply didn't grow because not only did supply not have the same balance sheet or discipline, supply also, if you ask me, got unlucky. Like they had these Boeing engine issues that could have happened to Indigo as well.
Correct. Correct.
And that hurt supply even more. And so what happened? Like you could have bought India's largest airline, I think, and we made the investment, the stock price was like 750 rupees. So maybe it was like a 30,000 crore company. And out of that, no, 35,000 crore company, out of which I think 10,000 crores was cash. So we were buying India's largest airline and the only solvent one really for $4 billion. And you knew that the growth was there. The growth runway is there because of that railway versus airline fun fact. You knew the supply discipline was there because your net worth is can't even match this company's net cash. You knew that the DNA was there of keeping costs low. And you knew that the balance sheet and the routes, they had the best ones. So if humans ever traveled again, and at that point it was an if, this company has to thrive for its competitors to survive. And I think that sort of played out like supply side dominance actually went up
Right.
and I guess like so market cap followed. And obviously today it's like, like if you told someone then that you were paying 20, 25 times earnings for this, I don't think they would have taken you seriously. Here we are today.
Yeah, I think the interesting point with this is कि such is the attention to detail. I think a friend of mine, we have a running joke, right? वो कहते हैं इंडिगो से ट्रैवल तो कर रहे हैं बट खाना पहले ही खा लेंगे एयरपोर्ट में वरना ये ठंडा सैंडविच खिलाएंगे
Exactly.
वो ठंडा सैंडविच इसलिए खिलाते हैं बिकॉज दे डोंट कीप अ माइक्रोवेव
Exactly.
इन द फ्लाइट
Yeah, yeah.
राइट एंड आई थिंक प्रॉब्ली बिकॉज द रन रेट ऑफ पैट इट इज एट प्रॉब्ली 4-5 years आउट क्योंकि पेसिमिस्टिक टाइम पे हम लोगों का इमेजिनेशन नहीं होता
Yeah.
बिकॉज वर्ल्ड बिकम सच ही इज डूइंग 6-7 thousand crore ऑफ पैट ऑलरेडी
Yeah.
प्रॉब्ली उस टाइम पे 4.5 to 5 times अर्निंग्स होता है
Earnings.
4-5 years आउट
Yeah.
That's the type of opportunities also people get when there is a pessimism.
Exactly.
इसलिए homework करना ज़रूरी है.
Exactly. Exactly. And these finer details, like this is a crazy fun fact, by the way. So, like, I remember when I was at Capital Group because we had invested in Rahul Bhatia's software business, we met him. And you could tell that his DNA, like, he was a frugal guy. At that point, Indigo was a large listed business. I'm talking about 2019, or 2018 or 2017. He used to still carry a Blackberry, like an old Blackberry. curve. I don't know which one, but like, I guess maybe the weight was lower than an iPhone, so he didn't feel guilty taking it onto his own aircraft.
I think that is those are the insights which usually one gets. And I think Indigo पे book भी लिखी हुई है. So all these
Yeah.
insights are there in the book also.
Yeah.
That's the beauty of researching companies which have already won over last 15 years, and you keep getting opportunities in the stock market because of
Absolutely.
the cycles of pessimism to optimism, because it never stays in between.
Correct. I mean, and also like you have to respect the fact it's hard to predict business. Like if you look at reports from 2019 on Indigo, they had overhired 180 pilots. They had engine issues. They didn't predict demand well. And so there were a lot of questions at that point on Indigo's operational abilities. And so, I mean, ultimately think about what a difficult problem they're solving. They have to send so many flights every day. All these flights have to be on time. They have to hire the pilots in advance of demand, because it's not as simple a job as maybe food delivery. Like pilots have to be very well trained. They have hundreds of lives in their hands. You might overhire, and then what if demand doesn't come? What if crude shoots up?
Correct.
What if crude doesn't shoot up, but FX shoots up? Your lease payments are ultimately in dollars, they're not even in rupees.
Correct.
So when so many variables are not out of your control, it's a difficult business, which makes their execution that much more impressive, in my eyes at least.
Now, just before going forward, in the life of an investor, every new financial year represents a new opportunity. So, as a part of beginning of FY26, what we aim to do in India is to spread financial literacy and आप सबको कि एक complete investor कैसे बनाए. तो SOIC मेंबरशिप का क्या पार्ट है कि पार्ट 1 ऑफ द मेंबरशिप में हम आपको ये सिखाते हैं अबाउट इंटायर थिंग अबाउट फाइनेंशियल लिटरेसी कि आप खुद की एसेट एलोकेशन, म्यूचुअल फंड प्लानिंग और खुद का फाइनेंशियल प्लान कैसे बनाएं. सेकेंड पार्ट ऑफ द SOIC मेंबरशिप में वी टीच यू अबाउट फंडामेंटल एनालिसिस कि आप फंडामेंटल एनालिसिस कैसे करें और स्ट्रॉन्ग कंपनीज कैसे ढूंढें. इन थर्ड पार्ट ऑफ द SOIC मेंबरशिप वी टीच यू अबाउट इंट्रिंसिक वैल्यूएशन ऑफ डिफरेंट बिजनेसेस की इंट्रिंसिक वैल्यू कैसे निकालें. इन फोर्थ पार्ट ऑफ द SOIC मेंबरशिप वी ऑल्सो टीच यू कि डिफरेंट डिफरेंट जो बिजनेसेस हैं या अपनी एक इन्वेस्टिंग फिलोसफी में एक सेलिंग फ्रेमवर्क कैसे बनाए. एंड इसके साथ साथ वी ऑल्सो टीच यू हाउ टू स्क्रीन फॉर बिजनेसेस. एंड फाइनली वी हैव अ सेक्टोरल एनालिसिस थिंग जहाँ पे हम आपको डिफरेंट डिफरेंट सेक्टर्स बारे में सिखाते हैं. एंड एज अ बोनस वी हैव ऑल्सो स्टार्टेड इनसाइट्स विद इशमोहित जहाँ पे हम डिफरेंट डिफरेंट सेक्टर्स पे या डिफरेंट डिफरेंट मार्केट पिवट्स पे एक वेबिनार भी करते हैं फॉर दी SOIC members. All these things are part of one SOIC membership, and you can use coupon code SOIC FY26 to get an exclusive off, which is valid for the next 7 days. Now, coming to the next set of question is that of rate of change.
Yeah.
Right? कि हम लोग ऐसा सोचते हैं कि जैसे laws of motion in Newton की something at rest stays at rest, something in motion stays in motion.
Yeah.
But there is also a moment की when something at rest gets into motion,
Yeah.
which is the rate of change.
Yeah.
ये कंपनी stagnant थी और अब एकदम ग्रो करने लगी.
Yeah.
So some of the examples which I think I remember was there's this company which used to be in music licensing
Yeah.
that we sort of जिसपे हमने केस स्टडी भी करी थी
Yeah.
हमारे यूट्यूब चैनल पे भी थी. सो वहाँ पे एक हम केस स्टडी का एक बहुत डिटेल में डिस्कशन कर सकते हैं. एंड सेकेंड वन probably is a slow rate of change. It happened over the last 10-15 years. It took entire decade for it to play out. Is that of the telecom sector.
Yeah.
So in both case studies, because both the businesses are linked to the consumer,
Yeah.
right?
Yeah.
Because आज आप बिना इंटरनेट के तो कुछ कर नहीं सकते,
Correct.
राइट? तो उसको आपको टेलीकॉम की जरूरत है ही है,
Yeah.
राइट? सिमिलरली म्यूजिक इज द मोस्ट फ्रीक्वेंटली कंज्यूम्ड फॉर्म ऑफ एंटरटेनमेंट.
Yeah.
अब
Right.
मतलब मेरी जो फेवरेट मूवी है जिसका नाम नहीं लेना चाहता मैं तो वरना लोग हंसेंगे, तो वो मैं शायद से 3 या 4 बार ही देख चुका हूँ.
Yeah.
व्हेयरएज़ मेरा जो फेवरेट सॉन्ग है दैट आई हैव हर्ड ऑलमोस्ट 25-30 टाइम्स, या दिन में कभी-कभी 1-1 2-2 बार ही सुन लेता हूँ.
Correct.
So how do you analyze this mental model of rate of change with respect to consumer businesses? एंड बाद में हम दूसरे सेक्टर्स की भी बात करेंगे जहाँ पे हम IT एक्सचेंज और इन सब का डिस्कशन करेंगे. बट स्पेशली सम ऑफ द केस स्टडीज की एज एन इन्वेस्टर जो ये पॉडकास्ट देख रहे हैं तो वो उससे क्या की लर्निंग ले सकते हैं कि कंज्यूमर सेक्टर में कैसे आइडेंटिफाई करें.
Yeah. So music is actually a great example, because this is a sector that is very close to everyone's hearts. And it's a sector which has been disrupted one way or the other every decade for the last 3 decades. So in the 90s, it was big business. You would buy like a CD, or no, you would buy cassettes then, if I remember correctly. And, IP was getting monetized. Then there was this thing called the internet which came along. Then you could immediately download things on LimeWire or Napster, for those of you who remember this. And so you no longer had to pay for content. So the music industry, which was doing really well, suddenly had this massive revenue shortfall. Then they got saved by the iPod. So now instead of buying a CD, you could buy like a track for $1. But then that content, people were still like, I'm paying $1 per song. That is not like I can just download it for free. Why am I doing that? It was not enough that the price fell or that you were allowed sachet consumption. For someone to actually pay for music, they needed convenience. They needed a product that was so much better or so cheap on a per stream basis or per song basis that I might as well just pay for the convenience. And that was streaming, right? Which is your Spotify's, Apple Music, Prime Music. So why is this important? Why does this link to the labels? Well, the label is not a consumer facing business. A music label just owns the IP. So the more you can monetize it, the more consumers pay for it, the more money you'll make, the less consumers are willing to pay for it because they can download everything for free, the less money you can make. And so, if you think about it, Spotify really started once the iPhone became prominent. So, like the early 2010s. And like most consumer movements, it starts in a wealthier country. So, in this case, interestingly, not even the US, Sweden, and then the US, and then obviously it came to India like by 2018, 2019, 2020, but still for a small sliver of population. Why is all this relevant? Until it came along, who in India was paying for music? You would just go to some store, have a CD burnt, put it in your car. That's your music, right? And so the music labels were worth not much.
पेन ड्राइव में भी कराते थे तो
पेन ड्राइव पे कराते थे. पेन ड्राइव तो टेक फॉरवर्ड था.
हाँ,
पेन ड्राइव इज फॉर टेक फॉरवर्ड पीपल.
राइट, राइट। वो सॉन्ग्स पीके करके एक वेबसाइट है, आई
Exactly,
रिमेंबर
sound
डाउनलोडिंग सो मेनी सॉन्ग्स।
exactly. Anyway, and so music labels were not that interesting. And now a broader media ecosystem में देखो, anyway there aren't dedicated sell side analysts for media, right? It's not that big a sector. You do media, then you do telecom, maybe you do something else. And on top of that, media, because of the nature of the business model, where there's glamour, celebrities, films, there is room for hanky panky. There's room for making decisions that maybe are not purely good in terms of capital allocation. Maybe you did it because you wanted access to some party. So the sector in general has not reliably created wealth. Sometimes you can have a media business that has some political links. So like there are different reasons why the sector has not been a reliable wealth creator. Now, if you top that with the fact that music labels as a business model were not viable, no one cared about them. So, wait, SAREGAMA is obviously today a much bigger company. It's more than $1 billion. But um, we were looking at this business after COVID, and we did this analysis where it was trading at like some, I don't know, 2,500 crores. They had land near Calcutta airport. Of course, they were never going to sell the land, but I'm just trying to highlight how cheap it was. That land was worth like 600 crores. So you're getting underlying music label for maybe 1,900 crores. Now, just let's take a step back. They have largest back catalog in India, bigger than T series. You can argue back catalog is old, it's not as recent, but India is a film obsessed country and you have the largest back catalog in the country for 1,900 crores. That's a pretty low number. Like that's what $250 million. I think at that point, Savan and Spotify were worth like a $500 million. They became unicorns, but the underlying catalog basically you were getting at a very low multiple. Now, one pushback I get on these top-down frameworks, although I find them interesting, you want the absolute EV to be low. Then you know you can make the big money, right? But one pushback I get is that, so what if the absolute EV is low? Like maybe they don't make money and then why is any value fair? But here's where it got interesting. Saregama actually made money on its music IP. I think back then it used to trade at like 15 times free cash flow. And here's where it got even more interesting. They had, I think, 10 to 12 crores of money, rupees that they were losing every year on Open, some random magazine that the promoter started.
राइट, राइट।
So effectively, you're not even paying up for this business. And you knew that the growth was inflecting because people are now finally consuming music. I mean, it's effectively free on YouTube. You just have an ad. They still get paid for that. And then some people have, I mean, ad supported streaming services. And it's just more convenient than like putting a pen drive. How do you update the pen drive for new songs? How do you select new songs easily? There are so many form factors. So we felt that Saigama was at this place where the revenue could grow. But there were two questions. One, like, why does this company exist? Like, okay, if it grows like Warner and UMG, they'll come and they'll kill the competition. Their balance sheet is so big. That's where there was a very unique Indian insight, at least we thought, which is in India, music labels play a kind of unique role in the film ecosystem. Film is a heavily positive working capital business. You first produce the film, then you make monetize it. So you have to put up the money up front. And you're obviously not getting bank funding for this, right? Because it's highly risky endeavor. And you're not getting equity capital for this because what equity values are in one film.
Right.
And so how do films get funded? Back in the day, it used to be illicit sources of funding. Then it later on became you were sort of a successful businessman. This was your vanity project. You got to hang out with the celebs. What was the third source of funding? Music labels. Why? Because if you sold the music rights to the company, you could get some cash upfront. The music labels would help you market. How do you market a film? It's the music videos, right?
Right.
With the trailer. And so the music labels actually were kind of, in a way, helping out with the working capital. And UMG and Warner don't do film music in India. Sony does, but the others don't. And so we felt that, okay, because of this unique role that music plays in the ecosystem, but it's not as artist driven, although that's changing. There is a reason these guys have to exist. And at some point, Warner will and UMG, they're well run companies. They may also change their mind and enter. But for that, these labels have to be worth something, right? They have to be worth like $1 billion. There has to be some business case. There has to be some underlying pat. So by then, how does it matter, right, to US shareholders?
Right.
So we felt that there was a clear qualitative right to win, like there was with Indigo. There was a clear reason why these stocks were under-owned, underrepresented, under-understood. I don't know if that's a word, but anyway, you get the point. And they were cheap. And so here's where it got even more interesting. And this, I guess, ties back in some ways to persistence framework, which is fine, a business is cheap, but a cheap business, because its financials are hard to understand, it's underground, underloved. How do you know that's not a value trap? I
Right.
mean, 9 or 10 times it could be a value trap. And so, what do we focus on? We've always said, okay, the lead indicators of the business have to change. Financials are lag indicators, but the lead indicators need to change. And then we're willing to invest because we know that when the lag indicators catch up, that's your re rating event. So, in SAREGAMA, what was the lag indicator? The EBITDA was all choppy. Why? Because the CEO of the company, whom we respect a lot because he's created, in a way, market cap in this category in India, he invested a lot behind Caravan, which is a speaker business. And ultimately selling speakers, it's not a high quality business. And if you try and burn money doing that, like it's not going to work out for you. And it's because he spent money doing this. The PNL was wonky. What happened during COVID? People are scared. You don't want to spend money on anything that's not making money. He stopped the burn. What else happened in COVID? Film production stopped. And what happens if film production stops? How do you acquire new content? So, on one end, your content spend fell off a cliff. The other hand, you lost the appetite to burn money on your speaker business. So, we knew that the choppy PNL will suddenly look like a massive margin expansion because your cost of IP is fixed.
Correct.
And so that sort of happened, I guess. Like, I guess we bought the stock at pre-split, like maybe 100 rupees or something. And it was literally at 15 times free cash flow. But I guess like that's the sort of the work, which is like you have to understand these businesses, the history, what makes them tick, what makes the CEO tick. The CEO owned 2% of the company. He had massive skin in the game. He's not related to the Goenkas. He's a professional CEO, very high quality. Um, and then you have to make sure that the lead indicators have turned, but they don't reflect on the lag indicators, which is why you're not paying up for the stock. And so frankly, like you need that zone of disillusionment, even within a consumer business. Like there's this notion that, oh, I'm buying a consumer business which is already well established, whether that's an underwear company or paints company, what have you, and it'll just work out because they will compound at a very high rate for a very long time. But that ignores how challenging it is to grow a real business in a country like India, which is competitive, where there's an affordability constraint. So maybe it's better to play in sort of these zones.
ना कमिंग टू द नेक्स्ट सेक्टर, क्योंकि हम लोगों ने देखा कि काफ़ी फंड मैनेजर्स ने बोला कि यार लार्ज कैप्स में सेफ्टी है, बट अब लार्ज कैप्स में मेजॉरिटी आईटी और बैंक्स है,
Yeah.
मतलब
Yeah.
बिकॉज बैंक शायद से 36% ऑफ इंडेक्स होंगे एंड आईटी इज ऑल्सो डोमिनेंट पार्ट,
Yeah.
राइट? तो ये
काफ़ी
दोनों,
इंडेक्स हो ही गया वहाँ पे 30।
हाँ, मतलब 50-55% इंडेक्स तो इसी में हो जाएगा प्रॉब्ली।
या,
तो व्हाट डू यू थिंक अबाउट बोथ द सेक्टर्स? एंड पहले आईटी सेक्टर से स्टार्ट करते हैं
या,
क्योंकि आईटी सेक्टर में नियर टर्म एआई का भी बहुत नॉइज़ है।
या,
क्या वो अपॉर्च्युनिटी है उसके लिए या अगेंस्ट है, या प्री कोविड क्या वैल्यूएशंस थी, आज क्या वैल्यूएशंस है? तो इस सेक्टर बारे में आप कैसे सोचते हो?
yeah. So IT actually, and see, Ishmohit and I talk all the time. We discuss a lot of our conversations are a lot more unfiltered across sectors, across stocks. And this is one sector that I've been always calling and crying about and asking ke, what has changed compared to pre-COVID to today to deserve the sharp premium versus pre-COVID? मतलब एक एग्जाम्पल ले लेते हैं. Let's exclude TCS and Infosys, two companies that actually trade in line with their pre-COVID PE multiples. If you look at Tech Mahindra, you look at Wipro, look at LTI Mindtree, you look at most of these large IT service providers, they are HCL Tech, they actually trade at a premium to pre-COVID levels. Have margins improved compared to pre-COVID levels? No. Has revenue growth visibility improved? No, it's worsened. The only thing that has improved fundamentally, and maybe could be an excuse to justify the valuation today, is the dividend payout ratio. So pre-COVID, a stock like Wipro had a 10 to 20% dividend payout ratio. It traded at 15p. So barely you were getting maybe 1.5% dividend yield. Today, the stock has almost 100% dividend payout ratio. Trades at forward, let's say 20p. So maybe you have a 3, 4, 5% dividend yield. So one could make the fundamental case that if you are growing earnings 6, 7% a year and you're generating 4% in a pre-tax dividend yield, so maybe 3, 2.8% post-tax dividend yield, that's sort of a fair multiple in line with the market. That's one argument you could make. But I have not understood the appeal. I mean, we are now 2 years into supposedly the budgets coming back for some of these IT companies. First, it was an FY25 story, H1. Then it became a FY25 H2 story. Now it is a back half of FY26 story already. So now for 2 years, we have not seen the growth, but we have not really seen the derating that comes with this lack of growth and lack of visibility, right? With the exception of the one or two mega caps, they're still trading at a significant premium. And we're not talking about best in class execution. We're talking about Tech Mahindra, Wipro, companies which have historically been laggards in terms of demonstrating revenue growth, in terms of demonstrating margins. The other thing is that this doesn't even take into account the impact that AI can have on their business model. Now, AI can lead to outcomes based pricing. Like depending on how well you use AI, it can shorten the time frame to do tasks. When it shortens the time frame to do tasks, there are two downstream impacts on IT companies. The first one is you can't bill the same amount as you were billing before because your client recognizes that it maybe took you a lot less time to do the same work. So they will ask for a rebate. And this might not happen in most business models, but it definitely happens in IT. If you look over 10 years, IT service margins have, I think, broadly stayed the same or actually declined in some cases. The second thing is maybe it leads to margin expansion. But again, this is a competitive business. No one has really expanded margins over the last 5, 10 years. I mean, sure, they might have expanded in very niche categories like ER&D, whether it's KPIT or Tata Elxsi, but the broader IT service majors have not really expanded margins. So what I'm unable to understand is you're paying a premium for pre-COVID growth. You don't know when this growth will come. Your margins are not going to go up, and your payout ratios are already maxed out. So what is the I'm not able to quite figure out like what is the appeal. There are one or two IT companies that are growing fast, like Coforge through its acquisition of Signity, its underlying sort of deal wins. Persistent is obviously operating in a league of its own. But there are also like these stocks that showed phenomenal growth but have tail risk. Like let's take auto ER&D companies. Auto ER&D companies, who are the main clients? Auto companies in Europe. What is the biggest risk for auto companies in Europe even before Mr. Trump? Chinese competition.
Right.
And now they have a tariff. So in that environment, when your customer is struggling and you're printing 30% EBITDA margins, I mean, you have to hope that they don't wake up and look at your annual report.
सबसे पहले तो R&D बजट ही कट होता है,
Exactly.
राइट?
So I understand that the sector is perceived to be defensive because it has behaved defensively in the past. Like in 2008, 2009, the growth rate but it fell from let's say 30 to maybe in the tens or whatever, but it still grew. Today, it's not growing 10%. And so I understand that these companies do well in an environment in which FX weakens.
राइट,
But what if you have a regime change and the FX strengthens? It's happened in India's history in the past. So a supposedly defensive business model could sort of not be that defensive for your portfolio. So, I mean, if you look at Persistence Capital, we've had basically zero IT exposure since inception. I don't even think if I look at what's in the pipeline, it's anywhere on the horizon. I mean, never say never, things could change, but it's very hard to justify sort of why you would pay 20, 23 times earnings for at best 10% IRR, unless the growth in the US inflects. But if the growth in the US inflects and there is this boom, maybe there are stocks that instead of growing 10, 12% grow 20, 25%. So even in that argument, why would you own IT? You could own something else.
बिकॉज़ अगर पेग रेशियो पे देखें तो लॉट ऑफ दीज़ कंपनीज़ आर ऑलरेडी एट 3 और 4 टाइms पेग।
Yeah, yeah, absolutely.
राइट,
Absolutely. And I understand that there are large caps and it's fashionable to say large caps are perhaps cheaper in value because they have not run as much as small caps. But I mean, that is sort of the top down. You've looked at the charts and arrived at the conclusion. But ultimately, for a company to grow, stock price to work, you need earnings growth, you need re rating, and you need additional liquidity.
राइट।
You need all three, some combination of the three.
And what could be the like because this sector is also going through a period of disruption.
Yeah.
So what do you think AI adds to it, subtracts from it, or how are you thinking about it? Because today I think हमारे पास उतने facts नहीं है।
Yeah, and I think it's evolving quickly. So it depends. Like if you're a BPO, maybe AI chatbots are going to be much more effective at entry level tasks than they were before. So if you're a BPO like FirstSource or Zensar, it depends on whether your mix comes from complicated problems or for simple problems. If you look in the US, BPOs like TaskUs or TELUS, they've derated massively. They trade at 8, 10 times earnings. So the BPO mix is important. That second mix that matters is where is your revenue in the US or where have you? Where is it coming from? If it's coming from auto companies, good luck. I mean, you can't be that defensive if your end client is not that defensive. So that's one thing. The third thing is we don't know in this sort of fog of war as AI is getting adopted, sorry, whether it's a good net negative or net positive near term, let alone long term. Long term, I have no idea, but even near term, I have no idea. It could be deflationary for revenue because things get done faster. Client wants that cost saving to be passed on to them. And if you have margin expansion, perhaps you retain it, perhaps you don't, because you know that your stock price works on revenue growth. Like when I see companies, services businesses whose stocks pop, why do they pop? Oh, the constant currency growth rate was 4 to 6%. Now it is 5 to 7%. So if you know that you are going to win a contract because you can undercut just a little bit and you can get that pop, you might be tempted to do that, right? But what I fundamentally not understood is, I mean, we aren't debating whether the growth rate is 5% or 15%. We're debating whether the growth rate is 4% or 8%. And for that 100, 200, 300 basis points, we are paying like 20, 23 times earnings. I mean, Nvidia trades at 19 times forward earnings. And IT service businesses that are large cap, they are driven by FII flows. FIIs have a global cost of capital. Like in some cases, small caps, FII flows don't matter as much because they're not the incremental buyer anyway. And a domestic capital has fewer avenues to invest in. So they might be a little more price insensitive vis-a-vis some of these FIs. So there's even that flows argument, right? Like if Wipro's trading at a premium to Nvidia, maybe a DII will look at it because it's the safety part of the portfolio. But this is a large company. You need the FIs to buy. And what is the case for them to buy? Google's at 15 times forward earnings. Nvidia's at 19 times.
Right, right. And these are companies who are actually into innovation and not
Innovation, they're
just
growing faster.
yeah, yeah.
They're just growing faster also.
It is quite an interesting take because see this sector, I think pros में क्या है कि the economics are really good.
Yeah.
You'll never see a loss making IT company,
Correct.
right? But cons में क्या है कि even though the economics are good, but where does the growth come from at this
Yeah.
point of time?
Yeah.
Because they're so well penetrated already in the world.
Yeah. Yeah.
That's the pros and cons ka balancing act.
Yeah.
I think that one has to keep thinking about.
And I mean, net, there's another thing, which is that maybe companies don't want to outsource as much as they used to. Like, I'll give an example, like incrementally. What was the case historically? If you were like an airline or a bank in the US, you struggle to hire tech talent. You would want someone from India to do it for you. If you're like Twilio or if you're Google, look at their campuses in India. Some of their largest incremental campuses are coming in India. If you look at real estate companies and you talk about their office leasing activity, it's pretty robust. Where is their office leasing activity coming from? It's not coming from IT services, it's coming from GCCs, global captive centers.
Right.
So if I'm Twilio in the US, I can outsource my business to TCS, but there's value not outsourcing things. I have greater control on what I can make my team do.
Right,
Maybe I'll just hire 2,000 people in Hyderabad myself. I have the balance sheet to support it. And unlike a legacy client, I'm a tech company. I understand how to hire, retain, grow engineers.
right,
So there's that headwind also because I would be very scared for the country if the proliferation of services stops or slows down. What's really interesting in Feb export data, service exports have again grown, I think mid to high teens dollar terms. manufacturing has lagged. But if services are growing that fast and IT services is struggling with growth, where is that growth coming from? It's what the real estate companies are saying. It's GCCs.
Right. And actually, I think there's a data also from GCCs ki the employment growth rates from GCCs has been at a 19% CAGR
Yeah.
over the last 4 to 5 years, which
Yeah.
is probably the fastest growing sector when it comes to hiring.
Exactly. And there, maybe AI is a good thing because
Right.
I was listening to this podcast by Satya Nadella recently, the CEO of Microsoft. And he said something interesting. He was asked the question, will AI replace all jobs? He said, well, then you have to ask the question that if someone makes a mistake in the job, if AI makes a mistake in some task, can it be sued? Can it be taken to court? If you're unwilling to change that legal construct, there has to be a human signing off at the end.
Right.
And so maybe before we get to the stage where jobs are replaced, either we improve the productivity of workers in the West or AI makes workers in the East in India super productive, in which case the case for GCC is just dramatically improved. I have no idea. But I'm saying in this environment, why bother with IT services? Like, they're in a situation where I think as before the March rally, 4 and 5 stocks were down 20% or more.
Right.
So like that one and two stocks, I'm talking about companies with a market cap not 1,000 crores. One and two stocks have drawn down 40% or more. Surely at that point, there's something easier to do, right?
Right. I think now because IT is one part of the large cap index,
Huh.
now the second part of the large cap index is banking.
Sure.
And we have seen that who's and who's of the investing world, malab it's a consensus contra. Let me put it that way.
Yeah, that's interesting.
That's an interesting take because every interview watch बैंकिंग मतलब
Yeah.
कंसेंसस कॉन्ट्रा बना हुआ है इस टाइम पे बिकॉज एवरी वन थिंग्स कि बैंक्स अभी आप कॉन्ट्रा जा सकते हो उसमें वहाँ पे वैल्यूएशन कम्फर्ट है
Huh.
ग्रोथ रेट्स का वी डोंट नो बिकॉज निम प्रेशर आ सकता है
Yeah.
बट व्हाट इज योर टेक ऑन द बैंकिंग सेक्टर एंड व्हाट डू यू थिंक कि हाउ इज दिस सेक्टर पोजिशन्ड एज ऑफ नाउ
Yeah. First of all, I take objection with the fact like there's a difference between valuation and value. Low valuation doesn't mean good value, and high valuation doesn't mean bad value. Like, let me give an example. If I'm 15 times earnings and I'm growing earnings 2% a year, and if I'm 25 times earnings and I'm growing 20% a year, what is good value and what is bad value? The 25 times earning stock, in my opinion, is the more desirable stock to own, but it's expensive. And we were just told that P multiples matter. That's why you have to look at large caps. So let's talk about that in the context of banking. So there are a few popular cases for banking. I'll just try and attack them one by one. The first one is, oh, look at these banking stocks. They have derated dramatically in the last 1, 3, 5, 10 years. And the classic examples I keep hearing are HDFC Bank, Kotak Bank. What is worth asking is, how have things on the ground also changed from 10 years ago? So first, let's look at how that has happened for these two banks. 10 years ago, how many banks did 15% ROE? I'm talking about Nifty 50 banks. Two banks, HDFC and Kotak. Today, how many Nifty 50 banks do 15% ROE? Until the IndusInd controversy, everyone. HDFC, Kotak, ICICI, Axis, SBI, Bob. Indian Bank, I think Canada Bank, all the large banks do 15% ROE. What is the competitive differentiation in terms of capital efficiency? There is none. Now you can argue ICICI Bank does 17, this guy does 15. I get it. So you obviously deserve some premium for every extra percentage point of ROE. But I think 10 years ago, no one even did ROE above cost of capital. So now if you have to buy banks in India, you're an FII. India for you is a foreign emerging market. You have one bank which has grown 20% for as long as you can remember. And it has a good ROE. And there is Kotak and he's smaller and he's growing. Then you have five other banks where there's no ROE, but yeah, maybe in 2 years it will turn.
right.
What are you going to buy? You're going to buy these two banks. Second thing, growth rates. How fast was HDFC Bank growing 10 years ago? I think 25% a year.
Right.
And 20% a year was the meme. HDFC Bank cannot
20% की FD
20% तो core में भी हो जाएगा.
वो मीम दैट 20% की FD डाल रखी है
Exactly.
राइट
Kotak was growing also that fast, if not faster, because he was small.
राइट
How fast are they growing today? Kotak is growing 1.5 times system, so still faster. How fast is HDFC Bank growing today? I think in the last quarter he grew 1% sequentially. Why is he growing slower? Two reasons. He's become too big. He's 15% of system. I mean, this is the law of large numbers. If you compound it 20% for forever, you can become the system at the end. Somewhat that has happened. The other thing is RBI. RBI said that credit to deposit ratio has to be 80, and you have merged with HDFC Limited. You have to replace the deposits, and you have to grow deposits in excess of loans. So what's the solution? Either you grow deposits 30% a year, but you're already pretty big, so you can't do that, or you cut your growth rate. He's done both.
Right.
Okay, so now your growth rate is gone. Your ROE differentiation versus everyone else is gone. 10 years ago, you could have made a penetration story. We discussed this in consumer. You were 1.5%, 2% of system credit. What are you today? 15% of system credit. So can you make a penetration story? Maybe, but it's not as compelling as it was. The third, which is the competition which doesn't even meet the eye, which is 10 years ago, how many conglomerate NBFCs had scale? Even Bajaj Finance didn't have scale.
Yeah.
Chola was a small cap.
Correct.
How many conglomerate NBFCs today have loan books of 50,000 crores or more? It's a pretty high bar, but I'll list it out anyway. Bajaj, Aditya Birla Capital, Chola. Poonawalla wants to get there in 3-4 years. I think Jio has pretty big plans. So the competition isn't just from PSUs that are well run. It's also from these conglomerate NBFCs that didn't exist. So your growth is not as differentiated as it was. Your competition is sharper. Regulators not in your favor. And you have like 10 companies that are going after your blood. And then let's add more. Leadership transition.
Right.
You had Mr. Aditya Puri at the helm for 25 years. Then you had a leadership transition in HDFC. You're going through the same thing with Kotak. There's been churn. I think the Federal Bank CEOs come from Kotak. So it's not even like the leadership is stable. So if I didn't tell you the name of the company and I just gave you these 5 stats and I said, do you think derating is warranted? It would be hard to argue that it's not warranted. So sometimes I feel like when these comments are made that, oh, large caps, because the P multiple is lower than, it's 19 times, that's the long term average. That is a very sort of top down view, which doesn't take into account the bottoms up reality. I mean, P multiples are an output, but the business outcomes that they are driven by is the input.
Right.
You have to also look at that. So for us, at least, we have been saying, yes, there is value in financials, but the part of the market that actually persistence capital owns, and by the way, none of this is a disclosure investment recommendation. We'll change our mind at any time. We could sell the stock. This is just for illustrative purposes. Is what we like about banks is the fact that they have low cost of funds, so they have the ability to pick borrowers. What we dislike about banks is practically everything else. We don't like the fact that they have to raise liabilities. It's really hard to raise liabilities in a country like India in a liquidity constrained environment. So, what is the closest proxy to banks? Conglomerate owned NBFCs. AB Capital, AAA rated. Bajaj, AAA rated. Chola, I think it is on the way to getting AAA rated. I'm pretty sure it'll get there, given their track record. So, what advantage do they have? They don't have a credit deposit ratio that they even care about. So, they can grow faster, and they have over the last 1 year. B, they don't actually have to do the hard job of raising deposits. They actually just raise money from the banks. And they can make the banks fight with each other because they're all AAA rated and they have great track records. So that's the second thing in their favor. The third thing is they don't have CRR, SLR ratios because they're not a bank, they're an NBFC. So their ROEs are structurally higher. So you have the ability to pick borrowers as well as a bank, or close to as well as a bank, but you don't have the headache of raising liabilities. You don't have the headache of managing a CD ratio. You don't have the headache of dealing with a regulator. That's obviously a lot more sensitive with banks because banks are systemically important
Correct.
institutions. So I guess like that is the part of the value chain that we find interesting because it doesn't have asset side issues that a subprime lender like microfinance or something could have. Doesn't have the liability side issues that a bank does. And I guess like yeah, people point. I guess one pushback that you could logically make after hearing this is well, you say all this, but banks have worked. But you know what's worked better than banks this year? Bajaj Finance, Chola, LTFH, AB Capital, all 4 stocks I think are actually up this year. No exceptions. And Bajaj and Chola obviously the best performing lenders here today.
And I think just to add to the point, a well run large cap bank
Yeah.
at best will have a 15-17% ROE.
Yeah, at best.
And in the very long run, your returns of the stock that you hold should converge with the ROE of that particular
Yeah.
business.
Yeah.
So that is the type of expectation should ideally one should have if they're able to grow.
Yeah, exactly. If they're able to grow, but they're not even able to grow. In fact, here's the crazy thing. They're considered expensive, but I think we did this analysis at the start of the year. There were only 2 stocks that we could find with a market cap north of 1 lakh crore, which are not cyclical, whose PEG was under 1. Chola and Bajaj Finance.
Correct.
It was not even like HDFC Bank, everyone thinks is cheap. But actually the PG might be like 3 times.
Right. So that's the interesting part. I think a lot of unintended consequences क्या हुआ after this merger of HDFC happened.
Yeah.
It also led to deposit wars,
Yeah.
right?
And they're not ending. And the other thing that's happened is there's also more of an equity culture in India. And by the way, this is what you get if you have high inflation. If you have high inflation, your FD doesn't make you any money. So
Right.
if the complaint from the banking ecosystem is that we are not able to raise deposits, that to me is, I don't know how to solve. I mean, that's a tough spot to be in, but it's pretty rational on the part of the depositor to not park deposits because they're not making anything after inflation. So who is capturing the benefit of this zero inflation return? It's the banks. And if you believe after COVID there has been enhanced investor awareness, why would people sign up for no returns after inflation?
राइट, राइट। ए पिछले 6 टू 9 मंथ से तो लोगों को लग रहा है कि एफडी अच्छी थी वैसे तो।
हाँ, वो that is true, but FD, but they could have put it in fixed income also.
Correct, correct. Just kidding, just kidding. So, I think linked to this, coming to the last part of the podcast, is that we've heard this entire debate about small caps being obscenely expensive, mid caps being very expensive,
Yeah.
and large caps being reasonable. So the question arises ki should we as if someone is a basically bottoms up stock picker, should they be focusing on caps? That's the first question. And secondly, should one, if one is doing active investing, actually be believe in these theoretical constructs?
Yeah.
That is B, because it also decides the flows.
Yeah.
And C, just I think is that कि whether you actually believe in this narrative कि हाँ actually में large cap में अगर banking IT है या फिर मतलब oil and gas names हैं,
हाँ.
so they might be cheaper versus some of the other peers, and यहाँ पे शायद से growth भी faster आ जाए versus mid and small cap.
Yeah. So there are very few things that I feel strongly about. This is an issue I somewhat feel strongly about. I think it's irresponsible to say that one sector or one part of the market, should be sold whatever lock, stock, and barrel, and everything else is a buy. Because I rarely think things are this black and white. And so maybe the best way to illustrate this is with the data, because the data is not my opinion. These are the facts. So let's dive in. Um, when you look at different indices, they don't adjust for what is the PAT contribution and where is it coming from. Simplistically, if I take an index and it only has two consumer stocks, another index has two banking stocks, the banking stock index will be cheaper. But does that mean it's fairly valued if it's at 25 times earnings and this is a 35 times earnings? No, it might still be overvalued. So, looking at the PE multiples without looking at what is the underlying business model that is driving the PAT through which you're coming at the PE multiples is, I think, irresponsible. So, first things first, in large cap land, banks and PSUs, I think, make up like 40-45% of the PAT for a Nifty 50 index.
Right.
The same percentage of total PAT coming from these two sectors is 8-9% in small cap index. So obviously, if your PAT is coming from state-owned entities, levered business models, should you get a discount? Yes. Now the second thing is, okay, maybe the PAT contribution is 40, but me as the person who's creating the index, I may give that a lower weight to adjust for that discrepancy. But here's where it gets more interesting. In Nifty 50 again, banks are 35%. You add
Mhm.
PSU, it might get to 40-45%. That same number in small cap land is 14%. Small cap lenders are way cheaper than large cap lenders. So if I made the weights the same, my Nifty small cap P multiple collapses. But I have not made them the same. I have not adjusted for the fact that what is driving. It's like comparing multiples between NASDAQ and the Chinese index. One might have a shipbuilding company and a telco. One will have Nvidia and Google. You will just look at one index and say that, oh, this is cheaper and this is more expensive. I mean, that's not how life works. You have to be a little more bottoms up than that. That's the second thing. So we actually ran this analysis and we tweeted about it, which is, hey, what if I excluded financials and PSUs? What's the median P multiple then? Because that is actually a clean representation. Here's where the data got really stuck. Large caps 40, mid cap 150, 50 times earnings. I'm talking about P multiple median X financials, X whatever, PSUs.
Yes.
And for small caps, the number is 28p. Is 28p expensive? Yeah. But it's still cheaper than 40 times earnings. And that in of itself is a jaw dropping data point. Now let's get into further nuance. We keep hearing that large caps are cheap. Let's look at the bottoms up growth story of large caps compared to before. IT services businesses struggling to show double digit earnings growth. They need FX to depreciate for that to happen. Large cap lenders struggling to show double digit earnings growth. Asian paints struggling to show double digit volume growth. FMCG staples struggling to show low single digit volume growth. Maxed out margins. Auto EMs, everyone's operating at high margins. We are looking at the volume data every month. Good luck for the earnings season. And we aren't even talking about tariffs, right?
Right.
What else is left? We're left with telcos. When did BSNL add subscribers? For the first time in the last year. Why? Because price hikes were taken by Reliance and Airtel. They're operating at high free cash flow margins now. They've gone through a capex cycle. They've killed competition. They've won the business.
Right.
But now they're in the harvesting cycle. Can they keep showing elevated earnings growth? No. Yes, you will have your. Oh, now let's come to pharma. A lot of pharma pat in the last year was given by Revlimid. Revlimid won't be there next year. So there goes your earnings growth visibility. L&D is subject to India's capex cycle. India's capex cycle can get hurt if there's populist schemes announced by elections. Now, does this mean there's no growth in large cap? No, there are companies that are executing really well. Mahindra is doing really well in growing its SUV business. Zomato, I mean, we can come to it later, and I don't know what they'll do again this quarter, but in general, they've shown good growth. Same with Trent, same with Apollo. Now you can argue that, okay, there are these 3, 4 large caps that are showing growth. Look at their multiples. Where is the value?
Right.
And
Right.
so,
Because even the ones which are showing growth are at some 100, 200.
exactly,
It's like
exactly.
doesn't make sense.
Now, one
Right.
pushback I could get is Tanishq. But what is Tanishq prone to? Lab grown diamonds.
Right.
Whose margins get hurt the most if lab grown diamonds become popular, which they are? Tanishq. So, okay, we have said that large cap stocks are cheap. Empirically, we've shown that doesn't adjust for what sectors actually drive the PAT, what weight you gave those sectors, what is the P multiple if you exclude the sectors. And now I just went bottoms up and said that, okay, like I've just covered 80% of the index. Show me where the growth is.
Correct.
Like, and then the last point that was made is, oh, hold on to your large caps because when FIIs come, they will come back. That is factually incorrect. If you look at FII data, their ownership in small caps has gone up in the last 1 year. It's fallen in large caps because, contrary to popular belief, people don't come in India to sit in defensives. For FIIs, India in any form is not defensive. If they want to buy defensive, they will buy Coca-Cola in the US. They're
Correct.
not going to come to India to buy TCS because it is defensive. If they're coming to India, they want growth, and the growth is not there in large caps, so therefore they're going to small caps. And so we've always said that only in India do people care about small cap, mid cap, large cap as a reason for why stocks need to trade at a discount or a premium. If I look in the US, there are small cap companies, Datadog, Doximity, so many of them. They all trade at a premium to Nvidia and Google and Apple. I've never heard anyone tell there that, oh, but this is a small cap, therefore we should give it a discount. This is not to say small caps can't correct. It's possible and it has happened. But from a business analyst perspective, I'm not able to make sense of this argument. And so we've always maintained this position that, look, we think that if the market is drawn down this much, there has to be enough value. There has to be something to do. But if you still can't find enough value, maybe the problem is you're managing too much money. And like, just don't take a cash call. Like, let the client put the cash, maybe help out HDFC with the deposits or put money in fixed income. But if after such a violent drawdown, you still believe that there is no value to be had, maybe the case is that it's too big a fund.
That is also a problem that happens with law of large numbers.
Yeah,
And I think the argument that was made was actually beautifully कि बॉटम्स अगर हम सोचते हैं कि हम कहते हैं लार्ज कैप सस्ते हैं तो हमने बैंक्स का देखा पहले फिर हमने आईटी सेक्टर का देखा फिर हम ऑयल एंड गैस भी डालते हैं ऑयल एंड गैस में आप कितना अर्निंग्स एक्सपेक्ट कर लोगे
exactly.
मतलब वॉल्यूम ग्रोथ तो लो सिंगल डिजिट ही है
Correct.
राइट
And EV risk. So multiples might fall.
हाँ टर्मिनल वैल्यू रिस्क है अब हम कह रहे हैं कि एक साइड पे हम कह रहे हैं ग्रीन एनर्जी आएगी फिर एक साइड पे हम ऑयल एंड गैस पे जा रहे हैं एंड देन फिर पीएसयूज की बात करिए अब पीएसयूज में भी जो भी लार्ज बैंक्स हैं या फिर जितने भी बैंक्स हैं सबका क्रेडिट कॉस्ट ऑलरेडी 10, 15, 20 ईयर लो पे है
Exactly.
तो यहाँ से तो वर्सन नहीं होएगा राइट
Exactly.
तो दैट इज ऑल्सो an issue that arises.
Yeah.
Maybe large cap में जो spaces बचती हैं, शायद से life insurance बचता है, but वहाँ पे जो regulations हैं वो थोड़ी
Correct.
tightened है काफी.
Exactly.
वहाँ पे capital cycle फिर भी थोड़ी शायद से favorable हो. Maybe एक aviation बचता है,
हाँ.
but वहाँ पे भी again beyond a point आप मतलब 20-25% PAT growth
कैसे
मतलब
दिखाओगे?
कैसे दिखाओगे?
Yeah.
So that is the genuine issue that arises, right?
Yeah.
Maybe only cement space is left वहाँ पे cyclical earnings recovery हो, but
Yeah.
volume growth में तो 5-7% growth sector ही है.
Exactly.
That's the conundrum that जो active investors जो active investing करते हैं आप सब मतलब मेरे लिए भी यही conundrum है कि यार large caps देखे तो but देखे क्या?
Yeah.
That's
Yeah.
the problem that arises.
I mean, this is one of the few rare instances where being subscale might be an advantage. You don't need the market to show earnings growth. You need 25 stocks. That is a far easier problem, I would say, than trying to find growth at scale. How do you even do it?
I think that's the beauty of people who are also doing individual investing.
Correct?
क्या अपना पोर्टफोलियो इस वे में बना सकते हो कि यू कैन गेट फास्टर अर्निंग्स ग्रोथ
Yeah.
बट यू डोंट नीड टू स्टिक टू दिस कॉन्स्ट्रक्ट क्या लार्ज कैप है राइट
Yeah.
जस्ट फॉर एग्जांपल आई थिंक आई स्टिल रिमेंबर कि ये 2017-18 में भी ना डिसलोकेशन का एक साइकिल आया था
Yeah. Yeah.
कि 12 से 18 महीने सिर्फ लार्ज कैप
Yeah.
चले थे अर्निंग्स ग्रोथ वही थी 18-20% की
Yeah.
ऐसा नहीं था कि अर्निंग्स ग्रोथ 40-50% हो गया
Exactly.
बट उस 12 to 18 मंथ के फेज में जैसे एपीएल अपोलो का आई लव टू टेक दिस एग्जांपल इज दैट कि इट यूज्ड टू बी एट सम I've seen it once at 2,800 crore market cap also.
Yeah. Yeah.
Today it's at 41,000 crore market cap,
Correct.
right? ठीक है 12 मंथ्स का उसमें ग्रोथ का एक पैची फेज आया बट सिंस देन आई थिंक बिजनेस वॉल्यूम वाइज क्वार्टरली जो रिपोर्टिंग होती है वॉल्यूम की थिंक एक टाइम पे 2 लाख टन की वॉल्यूम रिपोर्ट होती थी
Yeah.
अभी रिसेंटली डेटा आया देव रिपोर्टेड अ वॉल्यूम ऑफ ऑलमोst 8,40,000 टन
For the quarter.
फॉर द क्वार्टर
Yeah.
सो वॉल्यूम्स हैव सॉर्ट ऑफ quadrupled
Yeah.
right? And PAT and EBITDA, everything has gone up by more than 3-4 times. Working capital improve हो गया, the return on capital employed improve हो गया.
Yeah.
Everything went through the roof.
Yeah.
So that is where the real delta happened.
Yeah.
So APL Apollo even at that time was a large cap in a small industry,
Absolutely.
right?
It's like the flavors and fragrances thing, right?
Correct.
Like SH Kelkar and Privy are small caps, but they're actually behemoths in their sector. So are they small caps? Are they large caps? I don't know. And the other thing is like, I think people also like have this bias towards large caps in times of high volatility because the single day moves are not sharp.
Correct.
But what that hides you from is the drawdowns over an elongated period of time. What is the peak to trough drawdown for Asian Paints? What is the peak to trough drawdown for Avenue? What is the peak to trough drawdown for Infosys?
Correct.
It's all north of 20-30%. It's just that it didn't happen in Feb and Jan. It happened over 6 to 12 months.
It's like a boiling frog syndrome.
Exactly.
धीरे धीरे हुआ बट मतलब स्मॉल मिड कैप में क्या होता है हाई ग्रोइंग वाले भी एकदम ही गिर जाते हैं 15-20%.
Exactly.
But I think if you're an individual stock picker, that is the beauty of this market.
Absolutely. I think being subscale in any format
Right.
right now is because even if you look at it from a first principles basis, like there's this notion that index investing works. But really, where has it worked? It has worked in S&P 500, NASDAQ, and India. It's not really worked in most of the markets. Like, which market can you point to? And why has it worked in these markets? It's not because of some rocket science reason. It's because these companies showed earnings growth with good ROE. They were naturally part of the index. If you put coal mining companies, telcos, banks, state-owned banks in the index, then how can ETF investing work or index investing work? And so the problem I have with large caps again now, one more first principles analysis, which is what are the 6 drivers for earnings growth that a company has? Taxes, financial deleveraging, capacity utilization, margin expansion, revenue growth. These are the 5 levers. There's nothing else that you have to show earnings growth,
Correct.
right?
Correct.
Tax cut are you getting in India? No, you've already gotten it. Financial deleveraging are you getting? No, the NSE debt to equity ratio is 500 debt to equity ratio is the lowest since the index got invented. In fact, same fund managers who are saying we should invest in large caps are saying, well, if there's been so much QIP in small cap, presumably the debt has also been repaid, right? So, and also corporate balance sheets like SIB, banks like South Indian Bank, which are corporate banks, are showing negative slippages. So obviously there's no deleveraging. Then capacity utilization. So capacity utilization, we have been waiting for a private capex cycle in India for the last 10 years. Still hasn't occurred. What does that mean? If the revenue is still grown, that means capacity is reasonably well utilized at this point. So your DNA is not going to grow that much slower than sales. Now it comes to margins. Margins we've already highlighted in IT, there are no margins expansion because of the nature of the sector and auto. we're looking at slowing demand with tariffs. In telcos, they're looking at BSNL gaining subscribers, which means you have limits to how much price hikes you can take. In FMCG, you have sort of elevated margins with low volume growth. So if you want to re-accelerate volume growth, you have to cut margin or you have to do something on that front. What else is left? And in banks, you have peak ROAs because everyone's at 15% ROE. There's no delta in ROE right now between
Correct.
HDFC and SBI. So clearly their margins cannot go up. So I've just eliminated four levers. What is the last lever that's left, which is revenue growth, which is why we started the conversation by saying, okay, if you're saying that they're cheap, hopefully the PEG ratio is reasonable. And if the PEG ratio is reasonable because the earnings growth is there, but the earnings growth has to come from top line growth. And where is the top line growth? I mean, how many companies in Nifty 50 are growing revenue 15%?
तो इफेक्टिवली रेट ऑफ चेंज लार्ज कैप्स में पॉजिटिव नहीं है।
Yeah.
और क्योंकि अभी सब कुछ काफ़ी चीज़ें परफेक्शन में चल रही है, जैसे ऑटो हो गया, बैंक्स में हाईएस्ट आरओए हैं, या आईटी सेक्टर में ऑलरेडी वे कमिंग ऑफ अ हाई बेस। तो
Pharma
रेट ऑफ
Revlimid.
फार्मा में इट इज़ लेड बाय रेवलीमेड, एफएमसीजी में डिसरप्शन हो रखा है। तो रेट ऑफ चेंज में भी पॉजिटिव तो नहीं है, अगर नेगेटिव हो ना हो, बट पॉजिटिव तो नहीं कह सकते।
Yeah, exactly.
राइट।
We're just anchoring to the P multiples of years gone by.
नाउ आई थिंक कमिंग टू द लास्ट टू क्वेश्चंस।
Yeah.
एंड एक तो क्वेश्चन है मेरा कि आप वर्ल्ड मार्केट में व्हाट इज़ योर व्यू ऑन डिफरेंट ज्योग्राफीज, बिकॉज यू आल्सो इन्वेस्ट इंटरनेशनली, स्पेशली यूएस एंड चाइनीज एंड यूरोपियन मार्केट्स। And also, the last question is, because a lot of youngsters are also watching this,
Sure.
is that any young investor who wants to get into investing, how do they keep themselves updated? क्या tools हैं, क्या podcasts लोगों को सुनने चाहिए, या फिर what are the habits of an active investor which can really help basically young investors to अपनी अपनी जो investing game को level up करने के लिए?
Yeah, sure. So just very quickly, first on global markets, I mean, it's a super interesting year. I think if you had started this year and told someone, okay, I'm not very positive on Mag 7, but I think China tech is going to work, you would have been sort of not taken seriously. Yet here we are. And I think what's basically happening is as an equity investor, you kind of have to pay a little more attention to macro than you used to because countries are using policy as a weapon for or against their own companies. And that really matters. Like that only mattered historically in China, where a business model could be made illegal overnight. But what is the Chinese government saying this year? That we need to realign our economy to be more consumption oriented. Therefore, we need to do stimulus. We need to prop up local growth. We need to get tourism in. And we need to de risk from the US, make our own chips, make our own cars, make our own robots, make our own drones. And it's interesting. Phones, they have dominant market share. Drones, they have 99.4% market share. Cars, they're gaining market share. And in robots, Unitary, which is their robot, is much cheaper than Buffett Dynamics, which is owned by Hyundai, but American company. And so Chinese economy seems to be doing a lot of things that are conducive for shareholder returns, which is stimulate, ease, low starting PE multiples, underowned. And so, surprise, surprise, it's one of the best performing markets, if not the best performing market this year. Pockets of Europe are doing well. And I always assumed that an unintended consequence of Ukraine, Russia is that Europe would deindustrialize even faster, which would make the economies more challenged. What I did not bargain for was an American president that is so hell bent on making the world multipolar that he's managed to convince Europeans that they need to also reindustrialize. And so, if you look at stocks like Rheinmetall um, or other businesses that are listed there, obviously not as close to every single industrial stock in Europe, they've had quite a run this year, counterintuitively. Again, because of policy changes made in the US. And now, if you look at policy changes in the US, it's not all great. Like you have several challenges, which is let's take the Max 7. Netflix has run out of that penetration volume growth story. Nvidia makes 90% gross margin on some of its chips. So obviously everyone in the world wants a part of that pie. And the US doesn't want Nvidia to export to China. So they have that regulatory overhang. And then you have some commentary from Microsoft that maybe AI we're overbuilding. And that is enough to take the wings off the multiple. People are worried about Google. And they're worried about Google because they think ChatGPT can take some of the searches away. And so if you look at Google, it trades at 15 times forward earnings. Nvidia is now at 19. Apple is actually still the most expensive because no one denies that you'll still need a smartphone even in the world of AI, at least in the medium term. And so the stocks that have held up better are Amazon, which is a net beneficiary of more AI models. But even that's now been hit because if there's tariffs and the US consumer hurts, who gets hurt with it? Amazon. If there is indeed $1 trillion of excess spending by the government that gets cut, who gets hurt? The US consumer, Amazon. US is after 60% consumption led economy. So if you look at Mag 7, what has held up? It's Meta because it's relatively immune to all these trends. Although now if the US economy falls, if Meta and Google are like $2 trillion of combined market cap, they are the ad market. So now the ad market's also more cyclical because they are the market. There's no penetration story away from um, cable network or paper print. So even those stocks are hurt. So actually, if you look at Mag 7, it's a pretty challenged outlook. And then downstream, you have small caps that are trading at a premium, but really they've still drawn down a lot year to date. And so when the US is a big market of 4,000 listed companies, there will always be stocks that do well. But what makes the index work is Max 7. And that specific set of companies, and we haven't even spoken about the impact that Apple will have if they're not allowed to sell phones into China. And we're not speaking about the impact that PDD, Pinduoduo, which is a Chinese e-commerce company with global ambitions, will have on Amazon if they decide to enter that market more aggressively than they're already doing. And so that pocket of the market is challenged. And as is like most things in life, if something is very good for very long, it can't stay that good forever. Like Max 7 is in trouble. Not saying that none of this will rebound, but the limited point I'd want to make is that a lot of this rests on what happens in the White House because the White House has two conflicting goals. They want to bring the deficit down. You cannot have a recession and bring the deficit down, but you want to enact tariffs. So if you enact tariffs, cut spending, and cause a recession, your deficit won't collapse. So you can cut spending, but you can't blow up inflation because then your debt funding, your risk-free rate will not fall. So there are these three, four conflicting goals that they're trying to micromanage and put it together, and that's hard. And I'll repeat the goals. You want to cut spending, that's spending out of the system.
Right.
You want to raise tariffs, which in the near term
Inflationary.
is inflationary. But you want to bring down your 10-year bond, which is hard to do if it can happen if you're in a recession. But what if you're in a stagflation? Then you can't even do that.
Yeah.
And now you're moving to this multipolar world where there could be tariff wars. Like Canada doesn't, it's your closest ally. They don't want to talk to you anymore. China, Japan, and Korea have never agreed on anything. They've agreed on unilateral tariffs. You've managed to convince Europe that they need to reindustrialize. So I would say that in that fog of war, earnings multiples need to discount down. And that's happening. And there will always be stocks that work, but it's a pretty tough setup for someone who's massively overweight that part of the world.
करेक्ट आई थिंक मतलब मैं इतना मैक्रो नहीं करता बट दीज आर क्लासिक बेसिकली रेसिपीज फॉर अ स्टैगफ्लेशन एनवायरनमेंट
Yeah.
वेयर ग्रोथ नहीं है इन्फ्लेशन है
Yeah.
आप डीलेवरेज करने की ट्राई कर रहे हो एंड यू कांट इवन स्पेंड
Yeah.
तो stagflation on I don't know
Yeah.
what else it might
And
be some
someone will say, oh, but then maybe we can go into fixed income. But what will happen if rates go up and you're in fixed income?
tough setup
Very tough.
especially in the American markets.
Very tough setup.
Yeah, yeah. So I think that is with the world market environments right now. तो यहाँ पे इंडिया में तो फायदा है क्योंकि इंडिया मेजरली कंजम्पशन लेड और डोमेस्टिक इकोनॉमी है
Yeah.
तो
And
अपने
Neelkanth Mishra, the stat, no, US is 1% of our GDP
राइट
exports. And so if we have 10% tariff, that's a 0.1% GDP hit.
तो दैट्स द ब्यूटी ऑफ बीइंग बोर्न इन इंडिया और इन्वेस्टिंग इन इंडिया
Yeah.
एटलीस्ट
Yeah.
राइट so last question just for the young investors who are watching this. I think that was the one, right?
Yeah, absolutely. So, like, look, I think the great part about, I guess, at least why I enjoy investing is that this is a profession where you'll only do well if you enjoy learning because the day you feel like you know everything, chances are that you're in for a rude surprise.
Correct.
So you kind of always have to be curious, always have to be open-minded. You can't be close-minded to business models. You can't be close-minded to regime shifts. It's these regime shifts that make or break careers. And so learning is obviously very important. Um, what is interesting is I would say depending on where you're in your career, if you're early career in your investing journey, your classics are a good place to start, which is the Ben Graham book, book on Warren Buffett, a book on valuation, Peter Lynch's book. These are great places to start if you want to run the 0 to 1 of stock picking. Um, if you want to master the 1 to N, then I think what's important, the first thing that the best teacher is real life realized losses. So you need to start investing, however small, big, it doesn't matter. It will help you sort of learn more about yourself, your risk-taking appetite, and what is the best style for you. The other thing that I would suggest is podcasts, because what's happened is that the industry is evolving so quickly. And frankly, the best investors today to have a viable investment management business also need to have a public presence, which is a great gift for any newcomer to the profession, because you learn from the best, because they teach freely publicly, because they also have to build distribution. This is a big trend in the West, not so much in India, but definitely in the West. So podcasts like Acquired, Invest Like the Best, Uncapped, Business Breakdowns. Those are just four that come to mind that are sort of really high quality. I know that PPFAS has a business series as well in India, which is pretty good on YouTube. I was going to say SOIC, but then, I don't want to come across as biased, but that's definitely something you should listen to. And yeah, so I think podcasts are a great way to stay on top of sectors and investment frameworks for sectors. The classics are a great way to think about valuation and different ways to make money. And then for India, for earnings calls and stuff, like, I mean, I have like the guys who built Screener have done this massive, massive sort of service to the investing community. Like we at Persistence, we'll use everything, Bloomberg, FactSet, we pay for all these services. But what's wild is even we spend 80% of our time on screen.
Right. That's the beauty of the interface, I think.
Exactly. So hats off.
So I think as a bonus element in this podcast, what we'll do is that ki whatever basically resources Sid has spoken about,
Yeah.
हमने सारे के सारे resources एक basically Google spreadsheet में नीचे description के अंदर include कर दिया,
Yeah.
so that all of you can take advantage of those resources.
Yeah.
And a lot of them are freely available as well.
Absolutely. Absolutely.
Right. So on this note, we'll conclude.
Yeah.
Hopefully we meet for a podcast again soon, and this time probably in the next one we'll analyze an industry sometime
Yeah.
soon.
For sure.
And thank you so much for watching this.
No,
If
thanks
you
for having me.
ग्रेट ग्रेट एंड टू द इंटायर ऑडियंस जो आपकी टॉप 5 टू टॉप 7 की लर्निंग्स थी इस पॉडकास्ट से, डू लेट अस नो इन द कमेंट सेक्शन बिलो। विद दिस, जय हिंद।